Hello, good people. Today's Tuesday, the 4th of November, 2025, and we are off to a really nice start to the big November month. That seasonality has shown us is the best month. Real nice start, right? Seasonality is bullshit, I guess, is what I'm trying to say, in particular when everybody is just counting it in just like anything else. Anyway, not really that important. What is important is we are monitoring what I believe to be the things that have been driving this bull market to see when those things are no longer working. I would say that there were two things that I've been talking about, or you know what, three things that I've been talking about. Let's start with the positioning thing, where really since the market bottomed in April, this has been the most hated market we've seen, the most hated bull market. We haven't seen people getting long. We just haven't seen it. In the positioning data, it hasn't showed up. The positioning data hasn't been published for a month. As of a month ago, most of it was kind of neutral, although the S&Ps were still showing people way too short. And that was one of the things that was driving the market higher. I have a feeling, I don't know, because I don't have the data, I have a feeling that even that S&P data has probably gone neutral at this point, because we see some other positioning data that has really moved a lot in the ensuing 4 weeks. So we can kind of make the assumption that positioning is neutral or very close to. So that's kind of gone now as a market push. The second thing that I would argue has been pushing the market is this idea of liquidity in the system. So much liquidity, everything going up. And we're going to monitor for whether that is still happening. Well, it doesn't look like it is, because fixed income, for example, has started failing, even on what was positive news this day, right? Gold, which was a big liquidity push, has been failing for a few weeks now. Everything sort of has started to fail here the last few weeks that have been liquidity driven. Look at copper, right? Terrible few days in copper. And the ultimate, to me, liquidity market, crypto is obviously having some serious problems here, right? And I've been talking about on here how it's been having problems. Look, this was the October 10th day, right? And that's fine. There was a whole bunch of liquidations and all that, which is so ridiculous because you look at what a small move this is relative to everything, but whatever. This was rumored to be a big liquidation day. But if that were the case, why hasn't the market rebounded back, right? In fact, it's gotten worse. And today was even worse than that. It was a worse day than that day. There was nothing that Donald Trump said today about China or whatever that caused this. It just trades poorly. And this is a liquidity driven thing. Obviously, all the crypto is, and all the crypto has been absolute crap. So liquidity does not seem to be the answer right now. It's not there. So that's number two. That's a little bit of an issue there. Number three, obviously, is the AI narrative, right? How it's going to change the world and all this. And that's great. I have no argument. But again, what I care about is what the market's doing. The market has to continue to push higher on good AI news. Well, we had Palantir's earnings last night. They were better than anyone expected. They even upped, future expectations. There was nothing negative about that call. And Palantir went straight down. That's not good either. I have to read the quote from the CEO. These are arguably the best results that any software company has ever delivered. Woo! Pretty good. I think that every top, and I'm not saying that is the exact top of the market. I'm saying we have to monitor for if it is. Right now it's not acting well. But every sort of top needs a good quote. In 29, we had Irving Fisher. The stock market has reached a permanently high plateau, he said. That was a week before the 29 crash. Irving Fisher, for those who don't know, was a very, very respected economist. And his work, even to today, has stood the test of time. But nobody thinks of him about that. All they think about is that one quote that he said, which is why nobody wants to say anything this time like that. They all want to say it's a bubble, a bubble, a bubble. They want to be remembered for that in case the market crashes. Nobody wants to be remembered for saying that, hey, this is a never-ending bull market and, AI's changed and catch the top, because that's all they'll ever be remembered for again. Nobody wants that. But I thought that quote from Palantir was great. Another good sign, if we're going to look for these arbitrary signs like magazine covers, is Look at this, folks. Jason Shapiro got a new studio. Had to spend a whole bunch of money on equipment and this and that and blah, the other thing. Sign of a market top? You judge for yourself. But Jason Shapiro is just as susceptible to these things as everybody else. Okay? So anyway. So that's really what I'm saying here, right? Is that we're losing the things that have been helping this bull market. Can that change quickly? Sure, it can change quickly. But for right now, as of today, right now, the things that have, in my view, been driving the market are no longer working anymore. Okay? And so it's not a time to be aggressively long here, which I've kind of been saying anyway. I've been saying I think that now's the time to be hedging, and I thought the best hedges were short gold. And, the thing about the gold thing is people like to say, oh, well, gold goes up in times of stress. Well, this was not a time of stress. This was a time of the stock market from here all the way to here, the stock market going straight up. And gold was going up too, because in my view, these were liquidity events. Lots of money out there going into assets, including gold. That stopped, right? And it's going down now. Today was a time of stress. Gold went straight down because it's liquidity stuff. If that changes, if gold starts to go up when things are getting stressed, okay, then we can make that argument. But until then, gold is a liquidity thing. And so if we're going to want to hedge our risk because liquidity is drying up, then we want to short liquidity things like gold. Okay. The other one I've been talking obviously is the dollar. That one has worked pretty well as well, which was, perfectly set up from a positioning point of view, from a sentiment point of view, and from a market action point of view. It's done very well. From the lows, which was on the day that they cut rates, and there was no way that the dollar could go up because it was the first rate cut of what would seem to be a lot of rate cuts. There was a lot of talk on that day, as I spoke about on here, that the stock market was going to do like a news failure on that day, which it didn't. There was no talk that the dollar was going to, which it did. Surprise, surprise, right? We don't trade, we fade. The one where it was least likely to be seen as happening is exactly where it did happen. Regardless, I think that those are probably still, the best way to hedge your long stocks is to just reduce your long stocks. I think that's a good idea. Other ways to do it, I think, in this environment, all things considered, short gold, long dollar. Nothing new there. Been saying that. It's working. I've also been saying, maybe short fixed income. That one has not worked as well. It's worked. Also a sign of liquidity, I think. It's worked, but not as well. I'd rather be with the ones that are working well. Dollar, gold. And that's really the main, I think, story today. Is that the things that have been driving the market are no longer driving the market. So what is going to drive it from here, right? If the liquidity thing is drying up, and liquidity is a funny thing, I can remember specifically in 2008, before the market went down, a lot of people were bearish, yes, but the excuse for why the market wasn't going down was there was a ton of liquidity. And then suddenly, within a 2-month period, 3-month period, there was no liquidity anywhere in the world, right? Liquidity is a funny thing because when it starts going, people pull, right? Because a lot of the liquidity is velocity. And if all of a sudden things are going, people stop spending, velocity goes down, liquidity dries up, and you got an issue. We never know if this is the one, or what. We're always on the lookout for signs of that. And all I'm saying here is we're getting signs, clear signs that liquidity is drying up. So if liquidity ain't going to push it, what is? The AI narrative? Well, we just had a great AI narrative last night, and that didn't help. In fact, the thing got crushed. That's a problem. I think these are problems. So I think it's a time to, this is not a time right here, be aggressive. This is a time to batten down the hatches. The market's always going to be open, always going to be time to make money. And for the Bitcoiners, I saw a lot of people saying that they wanted to buy Bitcoin today. Why do they want to buy Bitcoin today? Well, because they're bullish Bitcoin. They're long-term believers in Bitcoin. They're Bitcoin bros, and they can get it cheap today. It's terrible. That's just like when I rant about not shorting the stock market on new all-time highs just because you're bearish, right? You're bearish the stock market because you think it's going to crash and it's a bubble. You don't need to short the all-time high. Short it when the market starts to show signs, right? Because there's plenty to go if there's going to, if we're going to crash, right? And quite frankly, if I had my COT data and it was showing that people were max long here, I would be shorting today. I don't have that data, so I don't know. So I'm not shorting today. I'm flat. I'm neutral. But this is really a time that we're starting to see these signs, right? But my point is with Bitcoin, if you think Bitcoin's going to 1 million, I think that's wonderful. That doesn't mean you have to buy it here. If it's going to 1 million, you got plenty of time. Let the market act better first, right? This is not a chart, and it's not based on chart analysis, but this is not something that you want to be aggressively buying here. You know, let it show some form of confirmation before you get aggressive. And if it's going to 1 million, you'll make plenty of money anyway, right? So just a thought, be careful with that too. We don't want to blow out. We want to be around. There's plenty of money to be made, plenty of time to make money. Right now does not strike me, based on these things that I talk about, the fact that the markets are not reacting to what they have been reacting up till now. And let's not forget the seasonality thing, right? You know, which I'm a fader of. Nobody wanted to be long in September or October. The market went straight up. Now they all want to be long in November or December because of the seasonality. It makes me a little nervous as well. So let's not blow out here. Let's not lose money here. I think this is the time to be careful. Best advice I can give here based on the things that I look at. Okay? And that changes, and we will talk about it as and when it changes on here, all right? Including tomorrow. We'll talk again then. But thanks for tuning in. I hope it helps. I hope everyone's doing all right, and we will talk again soon. Thank you. Hi, I just wanted to say, if you like these daily videos, we do them 4 days a week, Monday through Thursday, for people, and it costs, $10 a month. And I try to include a lot of other lessons as I go through, as you see in the daily videos as well. For that $10 a month, you also get our COT charts on equity indices and crypto. So if you think that's worth it, give it a shot. All right. And we hope to see you there. Thanks.